Semiconductor equipment manufacturing supplier ASML is experiencing a huge sell-off as a result of the tariffs implemented by Donald Trump. The stock is now down 25% off its high in 2025. But is this a buying opportunity for stock investors, or should this be a company that's avoided during this stock market tumult? I'll answer that question in this video, revisiting ASML, looking at its longer term prospects, evaluating the business again, sharing with you my proprietary discounted cash flow valuation model to see what I think is a fair value for this business, and answering if I think the stock is a buy.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
Looking at ASML's trailing 12-month revenue, you can see excellent growth for this business. At $31 billion in trailing 12-month revenue, that's up almost 4x from the $8 billion the company generated in 2015. ASML is a supplier of cutting-edge technology to companies like Taiwan Semiconductor, Intel, Micron Technology, and others that are producing and manufacturing semiconductor chips for other companies like NVIDIA, AMD, and Apple. So ASML is the very beginning, or not the very beginning, but the beginning of the supply chain for semiconductor manufacturing. Its cutting-edge technology is arguably unrivaled, meaning nobody else can produce the technology that it produces, giving the company strong pricing power. That's going to be important now as the cost of goods sold increases as a result of trade barriers increasing worldwide. So if ASML experiences a higher cost of goods as a result of trade barriers, it has the pricing power to raise prices, and its customers will likely pay because they have no other place to get the things that ASML sells. Still, there's going to be some offsetting forces for ASML's business. The company was starting to benefit from the rising effectiveness of artificial intelligence as companies like Taiwan Semiconductor, Micron, and Intel were increasing their manufacturing spending and manufacturing facilities and spending tens of billions of dollars to expand their manufacturing capabilities and update to the latest generation technology. That growth rate might slow down now as a result of the higher cost of goods sold. Demand for artificial intelligence will likely remain very high. This was a category that's been a primary focus for businesses worldwide. It helps businesses become more effective, offer customers better value, and lower their cost simultaneously. The slowdown in economic activity will likely slow down that growth rate, but that will likely just push it out a little bit further rather than cancel this altogether. This trend is something that's a no-brainer for almost every business worldwide. And sure, they might pause some of that spending for the next 3 months or 6 months or 9 months or even 15 months as a result of the consequences of the tariffs. But once they get their hands around the situation, they'll likely resume these investments. I mentioned the company has strong pricing power and generates very good cash flow from operations. You can see the recovery from the slowdowns, the semiconductor industry slowdown, and ASML's cash flow from operations totaled $12 billion in the trailing 12-month period. That's on revenue of $30 billion. So the company generates a greater than 33% cash flow from operations to sales ratio. That's on the uptrend, and it's likely to continue because orders from their big buyers are just now coming in. So even if those orders are slowed down, they're still likely to come in as some of these manufacturing investments have been put in place for years. And also, if there's going to be a shift in manufacturing as a result of tariffs, that could also be good news for ASML. Right? If companies see that being in one country has a much higher tariff, but another country has a much lower tariff, they might move their manufacturing to another country. And of course, that requires more investment, new technology investment to change their technology from one country to another. Now, I don't think this is likely, but if semiconductor manufacturing was to shift to the United States in a much more major way than has been in recent years, that could also be good news for ASML. Companies like Taiwan Semiconductor, Intel, and Micron have already indicated billions of dollars of expansion investments in the United States. Those investments could accelerate as a result of the tariffs because these companies may want to onshore their manufacturing to the United States to avoid these tariffs. ASML has one of the best returns on investor capital at 38% and moving higher. ASML is more of an assembler of technology and research and development rather than being the capital intensive type of semiconductor company like Taiwan Semiconductor or Intel. One of its advantages is its vast supplier network, where it outsources the component production of certain things that it needs to create its leading edge machines, EUV machines, and then it sells those EUV machines to its partners like Taiwan Semiconductor. So it generates very strong returns on investor capital. So looking at my discounted cash flow valuation for ASML, I have the intrinsic value per share at $610. Compared to the current market price of $590, it suggests that this stock is fairly valued. Now, I often say buying an excellent business at a fair value is a good investment. And I definitely think ASML is one of the best businesses in the world. So being able to buy ASML's business at a fair value, I think is an attractive investment. But let's look at it in one more way. Let's measure it on the forward price to earnings ratio. According to this method, ASML is trading at a forward PE of 18.6, which is the lowest it's been going all the way back to July of 2022, and it was only trading at this valuation very briefly before it jumped back up. I don't think you're going to be able to buy ASML stock at this low of a valuation for very much longer. So to answer the question, do I think ASML stock is a buy on this dip? I think so. I think this is a buying opportunity. Of course, for risk tolerant investors, because right now is an extremely volatile time as stock markets are falling as a result of the tariffs.
Hey everyone, I'm excited to announce a brand new private Discord for our channel members at the VIP Discord level. It's a great place to connect with me directly, engage with like-minded investors, and learn more and take your investing to the next level. Spots are limited, so join now before it's too late.